What's up, everyone, and welcome to the daily macro update for Wednesday, February 11th. We finally got the jobs numbers for the month of January, and it turned out to be much stronger than the market was anticipating. And so, when we take a look at this headline here, non farm payrolls top estimates. When taking a look at this, we did see a pretty decent acceleration in non farm payrolls. And the interesting component about this was that it was mainly driven by private payrolls. Now, when taking a look at the different components of the jobs report, specifically looking at the establishment survey, you get both the establishment survey as well as the household survey. And what was interesting was that when you divide it up into private jobs versus government jobs, we see that for the first time, really since December of 2024, you had a pretty large acceleration in private job growth, which is actually a positive sign for the labor market. Now, of course, we want to see multiple months of this trend continuing in order to get more confidence that the labor market is actually improving. But this type of signal is something where the Fed will look at this and say, hey, the labor market seems to be improving, growth seems to be, accelerating slightly, and why cut rates? And so, pretty interesting whipsaws going on between data points, as we saw yesterday, how retail sales actually contracted a little bit. But in any case, this was a fairly positive jobs report from what we've been seeing previously. And so, this got bond yields off of the long end or off of the low end of the trading range. The dollar shot down. And really, this was more of a proponent of, the real economy doing better than, some of these large mega cap tech stocks that continue to be in bearish trend. And, there are a couple of emerging bullish trends that are happening right now that most people aren't talking about. And it's sad to see because, the mainstream media, as well as most investors, what they look at is what is Bitcoin doing? What are the major Mag 7 tech stocks doing? And when they look at their portfolios and they're down, they think that, oh my gosh, this is the end of investing, blah, blah, blah. Meanwhile, over 70% of the sectors in the S&P 500 are in bullish trend. When you take a look at, this is Bitcoin here, which continues to draw down. But when you take a look at, energy, staples, materials, look at these bullish trends, industrials. And now with a more emerging trend, real estate, as well as now utilities. And, when taking a look at the ETF ratio, that is a signal of risk off versus risk on. Taking a look at this is the XLY versus XLP ratio. So consumer discretionary versus consumer staples. You can think about this as like consumers' decisions, whether to buy, that new car that they really like, or choosing to put groceries on the table, right, with consumer staples. And when this ratio here is going down, that's more so that consumers are choosing to spend their money on less discretionary things, right? And that's typically a risk off signal for the consumer. And what's interesting is that when you get this type of risk off signal, that doesn't mean that, there's no bull markets to be found. Like I mentioned before, there are over 78 out of the 11 sectors in the S&P 500 are in bullish trend. So somebody on TikTok here said, "Who asked this?" Well, when you take a look at the mainstream media with a lot of the different, headlines that they produce, a lot of them are doom and gloom and fear, which is not the case if you're looking at, these different, um, when you're looking at the market from a macro perspective, right? So, um, that's really what we continue to see and what we've been continuing to talk about over the past few weeks. With that, though, Taking a look at the S&P 500 ETF SPY, this still remains in bullish trend. There was one day where it went neutral, but it went right back to bullish trend. And yeah, the bookshelf behind me remains green. And also, too, if you go to our website here, the trend status that we always showcase on our website, macro-optics.com, it remains showing bullish trend there. So if you guys are ever wondering what our model is saying about the S&P 500, we always showcase the trend signal from our model on the homepage of our website there. So if you wanted to bookmark that and check it every morning, we do. If it does change, we do update it on there. But yeah, it was interesting to see the positive labor market data today. So yeah, S&P 500. What's interesting is that when you take a look at the equal weight S&P 500 ETF, which is the RSP compared to the XPX, which essentially instead of putting more weight on the Mag 7 tech stocks, every single 500 company has an equal weighted weight in the index, right? So let's take a look at that compared to the SPY here. Much better bullish trend. And so this is a broadening out of the market, right? So the percentage of stocks in the S&P 500 above their 200-day moving average has been accelerating here from the bottom back in November of last year from 38%. Now it's nearly 60%. And that's with cues and bearish trend. Let me see if I can make this a better. There you go. So this is the bullish percent index. Or I'm sorry, that's the wrong one. Here it is. The percentage of stocks in the S&P 500 above their 200-day moving average. Take a look at that. We're nearly at 70%. So, yeah, it's just a shift it's just a rotation from concentration to more broadening. And that's really what it is, right? Somebody on TikTok just says that sounds positive. It is. We continue to get growth acceleration indicators, not only from the United States yield curve, but also too, when you take a look at growth measurements, the actual hard data, you can see this as well, which if you guys go to our website and you go to the indicator dashboard here, which is something that we recently put together, you can see if you take a look at the the Fed growth indices here, you can see, yes, they did fall off quite dramatically back in 2022, but really they've been stair stepping higher ever since then. So this is the new orders index for New York, Philadelphia, and Texas. And then also too, when you take a look at industry here, you can see that industry has also been rebounding as well. So the real economy is showing positive signs, and some of the more financialized aspects of the economy, like the mega cap tech stocks, those are money is essentially leaving there and going into these sectors here. So again, this isn't a full blown bear market. It's a very concentrated bear market in things that a lot of people own, and the only thing that the mainstream media can really talk about. But if you if you brought in your own, palette of investable assets, you'll be able to continue to grow your money in this type of environment, as we showed, some of the many bullish sectors that are happening right now. So, yeah, interesting to see the yield curve have a little bit of a flattening period, and it seems as though the 2-year yield is winning the tug of war battle going on, right? So, as we've discussed before, the yield curve on a trending basis is doing what's called a twist, which is where the short end of the curve and the long end of the curve are moving in different directions. And we've also discussed in previous videos how that's not normal, right? Normally, yields act in a co-parallel movement, not anti-parallel. And so usually these are major shifts in what the bond market is trying to price in with the economy. And, if we do get the 2-year winning out, where the 2-year is falling and the long end of the yield curve is also falling, that could be, if that continues to trend, then we would shift more into a growth slowdown type of environment. But again, we're not seeing this really in the large part of the pricing markets as well as the real data. So the bond market is typically a super forward indicator, right? Typically, it pre um, it it almost predicts what the real economy is going to do by about 9 to 6 months, 6 to 9 months. So, yeah, we'll continue to see what happens from here. It's only the weekly performance, though. You still have a steepening on a trending basis. So, that's what we are seeing there for this week. And yeah, when taking a look at the S&P 500 here heat map, we have a pretty good, clear picture of today. And what I like to do with this as well, let's actually go, yeah, let's leave it as 1 month performance, and then we'll go to the mono size. And you can really just take a look at which sectors of the economy here or of the S&P 500 are red versus green on a 1 month basis. We can see that, energy, consumer staples, manufacturing, those all remain green. Process industry, what's typically red? Technology, right? Commercial services. So you really just have to go to where the bull markets are at. And another interesting thing, too, as well, with these heat maps is that if you really want to see where money flows are going, you just, instead of sizing it by market cap or mono, you size it by price times volume. Another word for this is turnover. And you can actually do this on a monthly basis as well. And you can see where the money has been flowing, right? And interestingly, even though, some of the tech sector or the tech sector is in bearish trend, you can see that there still are outliers such as Micron, SanDisk, right? If we take a look at those charts by themselves, take a look at Micron. Not every single tech company is created equal here. And this is in a clear bullish trend. It had a little bit of a price drop here to the low end of the trading range. And then look what's happening today. Nice little pop. Yeah, nice little almost 10% move today. So even within the specific sectors, if you're paying attention to where the flows are going, you could even find gems in these more bearish trending sectors. Now, with my team's process, we typically like to go to or start with at least the sectors that are in bullish trend. And so, yeah, interesting seeing that there. Really, technology services have been experiencing extreme outflows, right? Palantir, Microsoft, even some of Google, which is looking like it's going to break its bearish or its bullish trend here. Um, but look at the bigger performers here. Something like CAT, right? Look at this thing. Monster bull move. Even if we just go to what it's done since the start of the year in 2026, it's up 34%. So, yeah, the way that you see kind of the flows in this map are specifically going to the price times volume chart on a 1 month basis. Again, otherwise known as turnover. Now you can find it here on TradingView, or you can even go on our indicator dashboard on our website here, and you can just go to the stock heat map. You can find it here, and you can do the turnover on 1 month right there as well. It looks better on like a laptop as well as it looks better on desktop. Doesn't really look too good on mobile. but you really don't want to use this or use heat maps on mobile anyway. But but yeah, so that's pretty much all I have for you guys here today. We can go ahead and go into some comments and questions from the chat here, but hopefully you guys appreciate some of that there. Let's go ahead and take a look at Instagram. Great update. Do you have a written? Also, yeah, we talk about this all the time in our macro investing community. In fact, if you're trying to not only learn macro, but also a process that is reliable, consistent, and something that you don't really have to, think about in terms of if you're feeling emotions that day, if your portfolio is up and down, if you want to fade all those things, you can go to for those who are on YouTube, you can go to the link in the description below. Or for those who are on Instagram or TikTok, you can go to our 6-week challenge. And we have a little video there that you can play. But I would highly recommend applying for this month's cohort within the challenge. It's essentially 6 weeks to become a macro investor who is fluent with macro, who learns our process and is able to implement it. And yeah, I mean, it's as long as you finish it, it's for free. So definitely would recommend that if you're someone who is trying to get more consistent, maybe your position sizing is a little bit off, maybe your timing's a little bit off, maybe you're not selling at the right time, maybe you're not continuously holding for a certain amount of time. All those different things are in our 6-week challenge. So I'd highly recommend doing that. But that's where we give all of the internal updates and as well as actual ideas for all the things that we talk about on these live streams. So, good question there. Good question. Let's go to some of the questions here on YouTube. What's the lowest market cap you would go for stocks? I typically like to stay above $5 billion in market cap, um, unless it's something that I have a lot of confidence in. Right? But even if I do go lower than that, I typically don't like to go lower than 500 million. So, but good question. Can you talk about the revision for 2025 payrolls, which came in at negative 862,000? Seems like folks are overlooking that. I didn't actually see the revisions there. I did hear a little bit about it this morning, but we can take a look at it right now. Let's see. Let's go to BLS. Actually, it's the employment situation report. So let's just type that in. I forget where it has the revisions here. Give me a second. Usually they have the revisions. Let me see. Um, yeah, I forget exactly where it's located here. Okay, revisions total. Here we go. As of January 2025. So as of December, you said 182,000. I'm not seeing that number. I'm seeing negative 1.029 million, which is worse. But yeah, it looks like every single Every single month was a negative revision here. Let me blow this up a little bit just so you guys can see. So this is the revisions total from January to December of last year, seasonally adjusted. That's what you want. On this, you have the previously published, right, line, and then you have the as revised. So the difference is the revisions here, and they're added up, I believe. So yeah, pretty large deceleration in revisions. Um, but it seems like the market isn't necessarily caring about it at this moment in time. Yeah, maybe I can dive into it a little bit more, but yeah, it looks like it's way worse than 162,000. Is the macro favorable for real estate currently justifying XLRE taking off? It could be. Usually, when you see the price charts move like that, it typically front runs a lot of the. It typically front runs the real economy. So, hey Johnny, is there a macro madness tonight? Yes. So for the 6 week challengers and the people in the partnership circle membership, yep. Tonight at 8 p.m. we have our private Q&A called Macro Madness, and yeah, that is tonight. That's where we go pretty deep into a lot of the specific tickers that we're talking about, right? So ETFs, single stocks, things like that. But yep, we'll see you tonight, Matthew. Thoughts on CBRE? Hmm. I think someone brought this up too, and that there was the earnings coming out tomorrow morning, or that they just pre-announced. But yeah, I think this was one that we actually talked about the other day. How it had this price jump on lower volume, which is a classic bearish divergence, and I was saying that I wasn't buying before the earnings, and good thing we didn't, because that's quite the move. 12% down move in one day. Yeah, so hopefully you caught the bearish divergence before this drop here. I think this is actually something we talked about on Monday that someone brought up. But yeah, so that was a pretty easy one to spot. All right, let's take a look at some of the questions here on TikTok. Appreciate you guys for joining here. All right. All right, no questions there. So, but okay, well, I appreciate everyone for joining here. We will catch you guys tomorrow. Okay, someone asked, is XLY or XLF still bullish trend? No, that actually shifted to bearish trend in our model. So yeah, on that drop there, XLF is no longer in bullish trend. So good catch on that. But I appreciate everyone for joining. Have a great rest of your day. And yeah, we will catch you tomorrow. Bye, everyone.